One of the highest achievements a dividend stock can attain is the status of a dividend king. In order to achieve this status, a company must increase its dividend for 50 consecutive years. That's 5 decades of increasing dividend payments. Today we have 54 companies on the Dividend Kings list. And while they all have a remarkable track record that earned them a spot on this list, not all of them may be appealing dividend stocks to include in your portfolio. So let's take a closer look at each and every one of them to see which Dividend Kings are still excellent dividend stocks worth adding to our portfolios. I'm going to jump into my custom Dividend King spreadsheet that you can download for free using the link in the description below. In addition to having all of the basic information for the Dividend Kings, I also have the 10-year history for the dividend growth, the revenue, the return on invested capital, the free cash flow, the gross profit margin, the payout ratio, and the total return for each Dividend King here. And I've gone ahead and ranked each Dividend King with my custom quality score to assess its value. So let's go through all of the Dividend Kings based on the quality score to see how well they measured up. I'm going to jump over to the Analysis tab, where I can take a closer look at each Dividend King across all of these metrics, simply by typing the ticker symbol here. The highest ranked Dividend King based on my quality score is Automatic Data Processing, ticker symbol ADP, from the industrial sector. It currently has a quality score of 93%, with 100% being the best. The stock trades for $301.80, and my fair price estimate is $297, so it's pretty reasonably valued. ADP offers a dividend yield of 2.04%, with the 4-year average yield being 1.96%. It has a pretty good payout ratio of 58%, and a pretty strong chowder number of 13.88%. In case any of you don't know what the chowder number is, it's the sum of the dividend yield and the 5-year dividend growth rate. And in my opinion, a chowder number above 10% is pretty strong. ADP has a very good history of revenue and free cash flow growth. Its return on invested capital has generally trended higher over the last 10 years, and so has the gross profit margin. Dividend growth has been very strong, with the 3, 5, and 10-year CAGRs all above 10%. Meanwhile, the payout ratio has declined. And ADP has a pretty strong total return history, with a couple outsized years like 2019, 2021, and the current year. The 10-year total return CAGR is an impressive 16.27%. Looking at the more recent history, the 3 and 5-year CAGRs are a little bit lower, but that's due to a couple sluggish years in 2022 and 2023 where ADP saw a negative return. Year to date, the stock is up 32.91%, which is a pretty strong return. So overall, in my opinion, ADP is a very strong Dividend King, worthy of consideration. Number 2 on our list is Grainger, ticker symbol GWW, also from the industrial sector, with a quality score of 90.3%. The stock currently trades for $1,188, and I have it fairly valued at $912, implying it's potentially overvalued today. Grainger has a current dividend yield of 0.69%, that is below its 4-year average of 1.14%. It has a very low payout ratio of 22%, but a pretty weak chowder number of 7.81%. Revenue and free cash flow growth over the past decade has been pretty strong. The return on invested capital has generally trended higher and currently sits at 31.03%. The gross profit margin has been trending lower over the last decade, but recently it's trended up a little bit, closer to 40%. Dividend growth has been pretty good and trending a little higher more recently. We can see the 3-year dividend CAGR of 7.82% is better than the 5-year CAGR of 7.12% and the 10-year CAGR of 6.75%, telling us that dividend growth is accelerating. Meanwhile, because revenue and free cash flow have grown much faster than the dividends, the payout ratio has trended lower, from about 50% down to 20%. In the total return department, Grainger has not disappointed, with a very positive trend line for the last 10 years. Actually, since 2016, Grainger has not seen a negative return during any calendar year. And more recently, the returns have gotten even more impressive. In 2023, the stock popped by 50.54%, and year to date it is up 44.15%. Grainger has a 10-year total return CAGR of 18.61%, and the 3 and 5-year CAGRs are even more impressive, both sitting above 30%. In my opinion, Grainger is an excellent company, worthy of consideration, but it might be potentially overvalued today due to some of the outsized returns it has seen recently. Dividend King number 3 is S&P Global, ticker symbol SPGI, from the financial sector, with a quality score of 84.2%. S&P Global currently trades for $513, and I have it fairly valued at $479. It pays a forward dividend yield of 0.71% that is below its 4-year average of 0.83%. The payout ratio of 32% is very nice and low, and S&P Global has a pretty good chowder number of 10.52%. Revenue growth over the past decade has been very nice and consistent. Free cash flow has grown as well, albeit at a slower pace and with some bumps along the way. The return on invested capital has been all over the place, but this is not a strong metric for financial stocks. The gross profit margin, on the other hand, has improved greatly and currently sits just below 70%. Dividend growth has been pretty good, but slowing down more recently. We can see this in the 3, 5, and 10-year CAGR, with the 10-year CAGR being 11.74%, the 5-year CAGR being 9.81%, and the 3-year CAGR being only 5.73%. So even with the slowing dividend growth, we have seen the payout ratio climb a little bit, but still sit at a pretty comfortable 30%. In the total return department, S&P Global has trended a little bit lower, but had some nice returns during the last decade, like 59.31% in 2017, 62.27% in 2019, and 44.68% in 2021. Year to date, the stock is up 18.22%, which is pretty good. The 10-year total return CAGR is one of the best amongst all of the Dividend Kings at 20.44%. But more recently, the total return CAGR is slowing down to 14.58% over the past 5 years and just 3.98% over the last 3 years. In my opinion, S&P Global is a great company, but it might be slightly overvalued today and showing some signs of slowing down. Dividend King number 4 is Farmers and Merchants Bancorp, ticker symbol FMCB, from the financial sector, with a quality score of 84%. The stock currently trades for $1,065, and I have it fairly valued at $1,111, implying that it might be a little bit undervalued today. It offers a dividend yield of 1.75% that is pretty much in line with its 4-year average of 1.72%. The payout ratio is very nice and low, just below 15%, but the chowder number is a bit low as well, at 6.72%. FMCB has a very good history of revenue growth, and a pretty good history of free cash flow growth as well. The return on invested capital has generally trended higher over the last decade, and so has the gross profit margin. The dividend growth has been pretty steady, and actually accelerating a little bit more recently. We can see the 3-year dividend growth CAGR of 5.76% is better than the 5-year CAGR of 4.97%, and also better than the 10-year CAGR of 3.61%. And while the dividend growth is accelerating, the payout ratio has actually moved in the opposite direction, falling from about 40% down to about 15% today. In the total return department, FMCB has not delivered impressive numbers. It is worthy to note here that during the last 11 years, the stock has never had a negative return if you're looking at calendar year returns. Albeit some of these numbers are pretty low, like 5% in 2017 and 2018, just 1% in 2020, and 2.5% last year, and 2.5% this year. The 10-year total return CAGR of 10.07% is pretty good, but the 3 and 5-year CAGRs are not overly impressive at 5.36% and 8.69%. In my opinion, FMCB is a pretty decent company, but some of these numbers are not overly impressive to me. Dividend King number 5 is Commerce Bancshares, ticker symbol CBSH, also from the financial sector, with a quality score of 83.2%. The stock currently trades for $68.74, and I have it fairly valued at $84, implying that it's potentially undervalued. It offers a dividend yield of 1.57% that is below its 4-year average of 1.79%. The payout ratio is sitting just below 35%, which is very low, and the chowder number is pretty good at 12.2%. Revenue growth is pretty good and accelerating if we overlook the minor dip in 2023. The free cash flow growth looks nice from a long-term perspective, with a nice and positive long-term trend line. The return on invested capital has been pretty decent, aside from the minor dip in the current year. But again, this isn't a strong metric for financial stocks. The gross profit margin is very strong at 100%. The 10-year dividend growth history is very good, primarily due to the large increase in 2023. The 3, 5, and 10-year dividend CAGRs are all sitting above 10%. And to go along with this nice dividend growth history, Commerce Bancshares has been able to maintain a pretty steady payout ratio, oscillating around 30%. In the total return department, the stock has been pretty average, delivering a couple outsized returns in 2016, 2019, and the current year, with only one negative year during the last 11 years. The 10-year total return CAGR of 11.81% is pretty strong, with the 3 and 5-year total return CAGRs being a little bit weaker, primarily due to that 15.92% decline in 2023. In my opinion, Commerce Bancshares is a pretty good company. I actually like any company with a quality score above 90%. And quality scores above 80% are still pretty decent businesses worthy of consideration. Dividend King number 6 is Lowe's Companies, ticker symbol LOW, from the consumer cyclical sector, with a quality score of 82.5%. The stock currently trades for $270, and I have it fairly valued at $219. It pays a forward dividend yield of 1.7% that is pretty much in line with its 4-year average of 1.67%. The payout ratio of 37% is very nice and low. And Lowe's has a very good chowder number of 18.62%, primarily because of its fast dividend growth. Revenue growth has been very nice through 2022, followed by 2 years of declines, which may be an indication things are about to slow down. And that is why my quality score for Lowe's in the revenue department is only 60%. The free cash flow growth has been a little bit more impressive, especially if we look at the trend line for the last 10 years. Lowe's has improved its return on invested capital during the last decade, rising from 14.17% in 2014 to 30.15% in 2024. The gross profit margin has trended a little bit lower, but is sitting pretty strong at about 33%. The dividend growth history for Lowe's has been excellent, and one of the best amongst all of the Dividend Kings. The 3, 5, and 10-year dividend growth CAGRs are all sitting between 16 and 18%. And to go along with this high dividend growth rate, Lowe's has maintained a pretty relatively stable payout ratio, below 40%. In the total return department, Lowe's has delivered some very strong returns during the last 11 years, mixed in with a couple not so great years. Year to date, it is up 25.2%, which is pretty good. If we look at the long-term 10-year total return CAGR, it's a nice and impressive 16.87%. The 5-year total return CAGR is an even more impressive 20.09%. But the past 3 years have been a little bit of a letdown, with the 3-year CAGR being just 3.88%, primarily due to the 21.48% decline in 2022 and the below-average 14.03% gain last year. In my opinion, Lowe's is a great business, but the recent decline in revenue is a bit concerning. Dividend King number 7 is Parker-Hannifin Corporation, ticker symbol PH, from the industrial sector, with a quality score of 80.7%. The stock currently trades for $694, and I have it fairly valued at $401, implying that it may be grossly overvalued. It sports a dividend yield of 0.94% that is lower than its 4-year average of 1.36%. The payout ratio is very nice and low at 27%, and the chowder number is pretty strong at 14.32%. Parker-Hannifin has a pretty good history of revenue growth and an even more impressive free cash flow growth rate. The return on invested capital has jumped around a little bit and trended down during the last decade, but the gross profit margin, on the other hand, has trended higher. Dividend growth for the last 10 years has been very strong. The 10-year dividend growth CAGR is 13.6%, the 5-year dividend CAGR is 13.38%, and the 3-year dividend CAGR is the most impressive of all, sitting at 17.07%. To go along with this fast dividend growth rate, Parker-Hannifin has maintained a pretty steady payout ratio. In the total return department, Parker-Hannifin has delivered some excellent returns during the last 11 years. A 47.56% gain in 2016, followed by a 44.92% gain in 2017, a 40.75% gain in 2019, followed by a 34.79% gain in 2020, and the most impressive 60.81% return last year, followed by 52.77% year to date. Of course, mixed in here, we also have a 23% loss in 2015, a 24% loss in 2018, and a nearly 7% loss in 2022. Parker-Hannifin has an excellent 10-year total return CAGR of 20.43%, with an even more impressive 3 and 5-year total return CAGRs of 31.75% and 29.53%. In my opinion, this is a great business, but it might be a little bit expensive today. Dividend King number 8 is Cincinnati Financial Corporation, ticker symbol CINF, from the financial sector, with a quality score of 79.3%. The stock currently trades for $157, and I have it fairly valued at $139, implying that it may be a little bit overvalued today. It sports a dividend yield of 2.06% that is below its 4-year average of 2.46%. The payout ratio is very nice and low at 15.67%, and the chowder number is just shy of my 10% threshold, sitting at 9.72%. The company has a very good quality score for revenue, free cash flow, and the gross profit. Its dividend quality score of 75% is pretty decent, and we can actually see the dividend growth rate has been accelerating during the last decade. What's bringing the company down is a pretty poor quality score for the payout ratio and the return on invested capital. In the total return department, Cincinnati Financial has delivered double-digit CAGRs during the last 3, 5, and 10-year periods. Dividend King number 9 is Target Corporation, ticker symbol TGT, from the consumer defensive sector, with a quality score of 79%. Target has a current share price of $129, and I have it fairly valued at $176. It offers a forward dividend yield of 3.47% that is better than its 4-year average of 2.3%. The payout ratio is very nice and low at 46%, and the chowder number of 14.76% is pretty strong. My only concerns for the business are a declining revenue over the last 2 years, and some pretty weak returns over the last 3 years. In 2022, Target dropped by 34%. Last year it fell by 1.35%, and year to date it is down 4.29%. These are not impressive numbers. Even the long-term 10-year return CAGR for Target sits at only 8.74%. And over the last 3 years, investors have actually lost 14.69% annualized per year. 3 years of negative returns is likely why the stock looks undervalued in my custom valuation model. Dividend King number 10 is Illinois Toolworks, ticker symbol ITW, from the industrial sector, with a quality score of 77.3%. The stock currently trades for $275, and I have it fairly valued at $247. It sports a dividend yield of 2.18%, in line with its 4-year average of 2.2%. The payout ratio is very nice at 48%, and the chowder number is pretty decent as well, 9.16%. Illinois Toolworks has a pretty decent history of revenue growth, albeit not a fast one, with the 3, 5, and 10-year CAGRs being 4 to 5%. The free cash flow has grown a little bit faster, with the 10-year CAGR being 11.53%. The company has actually seen its return on invested capital improve during the last decade, and climb towards 30%. The gross profit margin has improved as well. The 10-year dividend growth history is pretty strong, but we can see the dividend slowing down a little bit. The 10-year dividend CAGR stands at 12.35%, with the 3 and 5-year dividend CAGRs being around 7%. The payout ratio has actually climbed a little bit, but still sits at a pretty comfortable 50%. In the total return department, Illinois Toolworks is pretty decent over the long term, with the 5 and 10-year CAGR both being in the double digits, but the 3-year CAGR of 5% is a little bit low. Dividend King number 11 is Nordson Corporation, ticker symbol NDSN, from the industrial sector, with a quality score of 77%. The stock currently trades for $254, and I have it fairly valued at $242. It pays a dividend yield of 1.23% that is above its 4-year average of 0.95%. The payout ratio is very good at 32.9%, and the chowder number is very good as well at 17.06%. Dividend King number 12 is RPM International, ticker symbol RPM, from the materials sector, with a quality score of 76.7%. It currently trades for $137, and I have it fairly valued at $144. It sports a dividend yield of 1.49% that is below its 4-year average of 1.73%. The payout ratio is very good at 38%, but the chowder number is a bit low at 7.52%. Dividend King number 13 is Walmart, ticker symbol WMT, from the consumer defensive sector, with a quality score of 72%. The stock currently trades for $95, and I have it fairly valued at $94. It pays a forward dividend yield of just 0.87%, that is well below its 4-year average of 1.47%. The payout ratio is very nice and low at 33%, but the chowder number of 4.14% is pretty low. 2024 is the best year for Walmart out of the last decade. The stock is up 83.9% year to date. And this strong return in the current year is actually bringing up the 3, 5, and 10-year total return CAGRs to 27%, 21%, and 15%. While the strong returns and the fair valuation are appealing, the dividend yield and dividend growth are not very attractive to me. Dividend King number 14 is Procter & Gamble, ticker symbol PG, from the consumer defensive sector, with a quality score of 68.8%. The stock currently trades for $176, and I have it fairly valued at $161. It pays a forward dividend yield of 2.29% that is below its 4-year average of 2.41%. The payout ratio is pretty good at 66%, but the chowder number is a bit low at 8.32%. Dividend King number 15 is Abbott Labs, ticker symbol ABT, from the healthcare sector, with a quality score of 67.8%. The stock currently trades for $115, and I have it fairly valued at $106. It pays a forward dividend yield of 1.9% that is better than its 4-year average of 1.7%. The payout ratio is pretty good at 65%, and the chowder number is pretty good too at 13.34%. Dividend King number 16 is Colgate-Palmolive, ticker symbol CL, also from the consumer defensive sector, with a quality score of 67.2%. The stock currently trades for $95, and my fair price is $97. It sports a forward dividend yield of 2.1% that is just below its 4-year average of 2.3%. The payout ratio is pretty good at 56%, but it has a pretty low chowder number of just 5.08%. Dividend King number 17 is Lancaster Colony Corporation, ticker symbol LANC, from the consumer defensive sector, with a quality score of 67%. The stock currently trades for $184, and I have it fairly valued at $253. The forward dividend yield of 2.06% is above the 4-year average of 1.84%. The payout ratio is pretty decent at 62%, but the chowder number is a bit low at 8.68%. The business is actually growing at a faster rate than its total return, driving the potential undervaluation in my custom valuation model. Dividend King number 18 is Tennant Company, ticker symbol TNC, from the industrial sector, with a quality score of 66.5%. It currently trades for about $85, and my fair price is $72. It pays a forward dividend yield of 1.38% that is above its 4-year average of 1.29%. The payout ratio is very nice and low at 19.61%, but the chowder number is also pretty low at just 6.6%. Dividend King number 19 is MSA Safety Incorporated, ticker symbol MSA, from the industrial sector, with a quality score of 64.8%. The current price is $173, and my fair estimate is $292. It pays a forward dividend yield of 1.18% that is in line with its 4-year average of 1.2%. The payout ratio is very nice and low at 28%, but the chowder number of 5.22% is not very appealing. A very significant improvement in the free cash flow rate in 2024 is driving the large potential undervaluation in my custom valuation model. Dividend King number 20 is Johnson & Johnson, ticker symbol J&J, from the healthcare sector, with a quality score of 64.2%. The stock currently trades for $149, and I have it fairly valued at $173. It pays a forward dividend yield of 3.32% that is above its 4-year average of 2.73%. The payout ratio is decent at 79%, but the chowder number is a bit low at 8.86%. More recently, Johnson & Johnson has delivered some pretty weak returns in the market, with a decline of 8.58% last year and a loss of 1.72% this year. Dividend King number 21 is SJW Group, ticker symbol SJW, from the utilities sector, with a quality score of 63.8%. The stock currently trades for $53, and I don't have a fair price estimate because SJW has negative free cash flow. The stock pays a forward dividend yield of 3.01% that is better than its 4-year average of 2.22%. The payout ratio of 56% is pretty good, and the chowder number of 8.94% is a little bit low. Long-term shareholders of SJW Group are probably not pleased with recent returns. Over the last 5 years, the stock has a negative CAGR of 3.58%, and over the last 3 years, the CAGR is minus 8.06%. Dividend King number 22 is American States Water Company, ticker symbol AWR, which is a utility, with a quality score of 63%. The stock currently trades for $82.74, and my fair price is $117. It pays a forward dividend yield of 2.25% that is above its 4-year average of 1.83%. The payout ratio at 58% is pretty good, and the chowder number of 11.32% is pretty strong. If we take a closer look at the free cash flow history, we can actually see that it's been negative since 2019, making my fair price estimate for this company pretty useless. Dividend King number 23 is PepsiCo, ticker symbol PEP, from the consumer defensive sector, with a quality score of 62.7%. The stock currently trades for $160, and my fair price estimate is $150. It pays a forward dividend yield of 3.38%, with the 4-year average being 2.75%. The payout ratio of 76% is pretty decent, and the chowder number of 10.42% is pretty attractive too. Dividend King number 24 is Genuine Parts Company, ticker symbol GPC, from the consumer cyclical sector, with a quality score of 61.8%. The stock currently trades for $124, and my fair price estimate is $93. It pays a forward dividend yield of 3.21% that is above its 4-year average of 2.56%. The payout ratio of 50% is pretty good, and the chowder number of 8.78% is a little low. Dividend King number 25 is Cisco Corporation, ticker symbol SYY, from the consumer defensive sector, with a quality score of 61.3%. The stock currently trades for $81.77, and my fair price is $113. It pays a forward dividend yield of 2.49% that is pretty much in line with its 4-year average of 2.5%. The payout ratio is sitting at 52%, and it's pretty good, and the chowder number of 7.8% is pretty low. Dividend King number 26 is Middlesex Water Company, ticker symbol MSEX, from the utilities sector, with a quality score of 61.2%. The stock currently trades for $61.07, with no fair price estimate due to the negative free cash flow history. It pays a forward dividend yield of 2.23% that is above its 4-year average of 1.57%. It has a payout ratio of 56% that is pretty good, and a chowder number of 8.36% that is a little bit low. Dividend King number 27 is California Water Service Group, ticker symbol CWT, from the utilities sector, with a quality score of 60.8%. The stock currently trades for $49.11 and has a fair price estimate of $54. The forward dividend yield of 2.28% is above the 4-year average of 1.79%, and the payout ratio of 31.7% is very nice and low. California Water Service has a pretty decent chowder number of 9.51% that is pretty close to my 10% threshold. Dividend King number 28 is Nucor Corporation, ticker symbol NUE, from the materials sector, with a quality score of 60.3%. The stock currently trades for $145, and my fair price estimate is just $54. It pays a forward dividend yield of 1.48% that is below the 4-year average of 1.53%. The payout ratio of 20.61% is very nice and low, but the chowder number of 7.64% is also low. The low fair price estimate in my custom valuation model is driven by the declining free cash flow during the last 2 years. Dividend King number 29 is United Bankshares, ticker symbol UBSI, from the financial sector, with a quality score of 60.2%. The stock currently trades for $41.60, and my fair price estimate is $34. It pays a forward dividend yield of 3.56% that is below the 4-year average of 4.08%. It has a decent payout ratio of 55%, but a pretty low chowder number of 5.11%. Dividend King number 30 is Kimberly-Clark Corporation, ticker symbol KMB, from the consumer defensive sector, with a quality score of 59.8%. The stock currently trades for $138, and my fair price estimate is $168. It pays a forward dividend yield of 3.53% that is pretty much in line with its 4-year average of 3.51%. The payout ratio is pretty good at 62%, but the chowder number of 6.98% is a little bit low. Dividend King number 31 is PPG Industries, ticker symbol PPG, from the materials sector, with a quality score of 59.7%. It currently trades for $125.50, and my fair price estimate is $127. It pays a forward dividend yield of 2.17% that is above the 4-year average of 1.75%. The payout ratio of 41.5% is pretty good, and the chowder number of 8.25% is a little bit low. Dividend King number 32 is Dover Corporation, ticker symbol DOV, from the industrial sector, with a quality score of 59.5%. It currently trades for $201.78, and my fair price estimate is $168. It pays a pretty low dividend yield of 1.02% that is below its 4-year average of 1.35%, but it does have a very low payout ratio of 18%. The chowder number is not attractive at all, sitting at just 2.13%. Dividend King number 33 is Altria Group, ticker symbol MO, from the consumer defensive sector, with a quality score of 59.3%. The stock currently trades for $56.91, and my fair price estimate is $47. Altria pays the best dividend yield amongst all of the Dividend Kings, currently at 7.17%, sitting just below its 4-year average of 7.99%. The payout ratio of 66% is pretty decent, and the chowder number of 11.22% is pretty attractive as well. Dividend King number 34 is the Gorman-Rupp Company, ticker symbol GRC, from the industrial sector, with a quality score of 57.5%. The stock currently trades for $41.84, in line with my fair estimate of $42. It pays a dividend yield of 1.77% that is below the 4-year average of 2.07%. It has a decent payout ratio of 49%, but a pretty low chowder number of 7.42%. Dividend King number 35 is H.B. Fuller Company, ticker symbol FUL, from the materials sector, with a quality score of 56.7%. It currently trades for $75.61, with my fair estimate being $71. It pays a forward dividend yield of 1.18% that is above the 4-year average of 1.06%. The payout ratio of 25% is very nice and low, but the chowder number of 7.74% is pretty low as well. Dividend King number 36 is Archer Daniels Midland Company, ticker symbol ADM, from the consumer defensive sector, with a quality score of 55.8%. The stock currently trades for $52.28, and my fair estimate is $163. It pays a forward dividend yield of 3.83% that is above the 4-year average of 2.41%. The payout ratio of 54.67% is pretty attractive, and so is the chowder number of 11.22%. Because of the negative free cash flow in 2018, 2019, and 2020, my fair price estimate is a bit skewed for this company. Dividend King number 37 is Fortis, ticker symbol FTS, from the utility sector, with a quality score of 55.7%. The stock currently trades for $44.89, and my fair estimate is $49. It pays a forward dividend yield of 3.92%, which is in line with its 4-year average of 3.86%. The payout ratio of 48% is pretty good, and the chowder number of 8.81% is a little bit low. Dividend King number 38 is AbbVie, ticker symbol ABBV, from the healthcare sector, with a quality score of 55%. The stock currently trades for $176.17, and my fair estimate is just $97. AbbVie pays a forward dividend yield of 3.72% that is just below its 4-year average of 3.92%. The payout ratio is very high at a whopping 212%, but the chowder number is pretty good at 11.42%. AbbVie doesn't look attractive in my valuation model because it has 2 years of declining free cash flow. Dividend King number 39 is Hormel Foods, ticker symbol HRL, from the consumer defensive sector, with a quality score of 51.5%. The stock currently trades for $32.86, and my fair estimate is $46. It pays a forward dividend yield of 3.44% that is above its 4-year average of 2.58%. The payout ratio is pretty good at 78%, and the chowder number of 9.55% is pretty close to my 10% target. Dividend King number 40 is Emerson Electric, ticker symbol EMR, from the industrial sector, also with a quality score of 51.5%. It currently trades for $133.15, and my fair estimate is $117. Emerson pays a dividend yield of 1.58% that is below its 4-year average of 2.21%. It has a pretty good payout ratio of 61%, but a very low chowder number of just 2.9%. Dividend King number 41 is Becton Dickinson & Company, ticker symbol BDX, from the healthcare sector, with a quality score of 50.2%. It currently trades for $222.24, and my fair price estimate is $285. The stock pays a forward dividend yield of 1.87% that is above its 4-year average of 1.41%. It has a pretty decent payout ratio of 63%, but a pretty low chowder number of 6.52%. Dividend King number 42 is Consolidated Edison, ticker symbol ED, which is a utility with a quality score of 47.8%. The stock currently trades for $96.50, and my fair price estimate is $93. It pays a forward dividend yield of 3.44% that is slightly below its 4-year average of 3.65%. It has a pretty decent payout ratio of 59%, but a rather low chowder number of 5.76%. Dividend King number 43 is Coca-Cola, ticker symbol KO, from the consumer defensive sector, with a quality score of 46%. The stock currently trades for $62.92 and doesn't have a fair price estimate in my model, due to its declining free cash flow. It pays a forward dividend yield of 3.08% that is above its 4-year average of 2.96%. It has a pretty decent payout ratio of 78%, but a rather low chowder number of 7.01%. Dividend King number 44 is Tootsie Roll, ticker symbol TR, from the consumer defensive sector, with the quality score of 45.8%. It currently trades for $33.14, and my fair estimate is $51. Tootsie Roll pays a forward dividend yield of 1.09% that is below its 4-year average of 1.23%. It has a very high payout ratio of 222% and a pretty low chowder number of just 3.48%. Dividend King number 45 is Universal Corporation, ticker symbol UVV, from the consumer defensive sector, with a quality score of 45.3%. The stock currently trades for $56.86 and doesn't have a fair price estimate due to some negative free cash flow history. It pays a pretty attractive forward dividend yield of 5.7% that is below its 4-year average of 6.02%, and it has a decent payout ratio of 64%, but a rather low chowder number of 6.99%. Dividend King number 46 is Federal Realty Investment Trust, ticker symbol FRT, from the real estate sector, with a quality score of 41.7%. It currently trades for $113.61 and has no fair price estimate, again due to the negative free cash flow history. It pays a forward dividend yield of 3.87% that is below its 4-year average of 4.09%. The payout ratio is pretty high at 125%, and the chowder number is pretty low at 5.01%. Dividend King number 47 is Stepan Company, ticker symbol SCL, from the materials sector, with a quality score of 41.5%. It currently trades for $74.28 and again has no fair price estimate due to the negative free cash flow. It pays a forward dividend yield of 2.07% that is above its 4-year average of 1.38%. The payout ratio is pretty decent at 73%, and the chowder number is pretty attractive at 10.13%. Dividend King number 48 is ABM Industries, ticker symbol ABM, from the industrial sector, with a quality score of 41.3%. It currently trades for $56.70, and my fair price estimate is $52. ABM pays a dividend yield of 1.59% that is lower than its 4-year average of 1.8%. The payout ratio is very nice at 36%, but the chowder number is pretty low at 6.15%. Dividend King number 49 is Northwest Natural Holding Company, ticker symbol NWN, which is a utility with a quality score of 40.7%. It currently trades for $42.30 and has no fair price estimate, again due to negative free cash flow. The stock pays a pretty attractive forward dividend yield of 4.63% that is above its 4-year average of 4.33%. The payout ratio is a bit high at 90%, and the chowder number is not attractive at 5.15%. Dividend King number 50 is National Fuel and Gas Company, ticker symbol NFG, which is an energy stock with a quality score of 38%. It currently trades for $62.18, and my fair price estimate is $83. But this fair price estimate is a little bit skewed by some of the negative free cash flow history. The stock pays a forward dividend yield of 3.31% that is below its 4-year average of 3.38%. It has a very high payout ratio of 237% and a below average chowder score of 7.03%. Dividend King number 51 is Black Hills Corporation, ticker symbol BKH, which is a utility with a quality score of 36.7%. It currently trades for $62.77 and has no fair price estimate because of its negative free cash flow history. The stock pays a pretty attractive forward dividend yield of 4.14% that is above its 4-year average of 3.85%. It has a pretty decent payout ratio of 67.96% and a pretty decent chowder number of 9.01%. Dividend King number 52 is Stanley Black & Decker, ticker symbol SWK, from the industrial sector with a quality score of 36%. The stock currently trades for $84.93, and my fair price estimate is $108. But this fair price estimate is a bit skewed by the negative free cash flow in 2022. Stanley Black & Decker pays a pretty attractive dividend yield of 3.86% that is a full 1% above its 4-year average of 2.86%. It currently has a negative payout ratio of 229%, which is very bad, and a chowder number of 7.7% that is pretty low. Dividend King number 53 is Kenvue, ticker symbol KVUE, from the consumer defensive sector with a quality score of 30.3%. Kenvue is a 2023 spin-off from Johnson & Johnson, and as such, it doesn't really have much of a history to measure here. So that is primarily why it has a pretty low quality score. And Dividend King number 54 is Canadian Utilities Limited, ticker symbol CDUAF, which is a utility with a quality score of just 27.8%. It currently trades for $26.33 and has no fair price estimate due to its negative free cash flow history. It pays a pretty good dividend yield of 4.94%, but one that is below its 4-year average of 5.21%. The payout ratio of 107% is not very good, and the chowder number of 5.75% is also not very attractive. So there you have it, all 54 Dividend Kings ranked with my custom quality score. If you'd like to take a look at any of these Dividend Kings in greater detail, you can download a free copy of this spreadsheet using the link in the description below. I hope you enjoyed the content. If you did, please give this video a like and subscribe to the channel. See you next time.